In a move that's rocked the global auto industry, Hyundai Motor Company has announced it will completely withdraw from the US market by the end of 2026. This ends nearly 40 years of Hyundai's presence in America. The catalyst? The Trump administration's American Auto Independence Act, a sweeping policy overhaul enacted earlier this year. The act's goal boost domestic manufacturing and protect American jobs, but at a steep cost for foreign automakers. Tariffs, strict local content rules and tax incentives now heavily favor vehicles built in the US with American-made parts. For companies like Hyundai, which invested billions in US plants but still relied on global supply chains, the new rules proved disastrous. The competitive landscape shifted overnight, putting international brands at a severe disadvantage. Tonight we break down how this policy upended the market and forced Hyundai's exit. The impact is massive. Thousands of American jobs at Hyundai's Alabama plant and dealerships are at risk, and millions of drivers lose a trusted brand. This isn't just about one company, it's a case study in the clash between protectionist policy and global business. Before the act, the US auto market thrived on competition, innovation, and consumer choice. American, European, and Asian brands pushed each other to improve and keep prices in check. Now, the market is shrinking and realigning. Data shows rising prices, falling imports, and fewer choices for consumers. The American auto landscape is undergoing a seismic shift, and the aftershocks are just beginning. As we'll see, Hyundai's departure is only the first sign of deeper changes ahead. The story is about more than cars. It's about the future of American industry. What happens when national policy collides with global commerce? The answer is unfolding right now. The American Auto Independence Act is the centerpiece of the administration's economic agenda. Signed in March 2025, it introduced a 25% tariff on all imported vehicles, a tenfold increase from previous rates. But the real game changer is the local content rule. To avoid tariffs, automakers must prove 75% of a vehicle's components are sourced from the US or Canada. This is a huge leap from the 50–55% that was standard for many foreign-owned US plants. Automakers with global supply chains now face a tough choice: overhaul their networks at enormous cost, or pass tariffs onto consumers. The act also created the Automotive Revitalization Board, a federal body that rigorously audits supply chains for compliance. Failure to meet the standards means steep fines and more tariffs. Supporters say the act will bring jobs and investment back to America. Critics warned it would raise car prices, limit consumer choice, and spark trade retaliation. Early data shows those warnings are coming true. Hyundai's struggle is a clear example of the act's disruptive power. The new rules have upended decades of industry practice. The consequences are rippling through every corner of the market. The American Auto Independence Act triggered immediate backlash from global trading partners. The EU, Japan, and South Korea filed complaints with the World Trade Organization, calling the act an illegal trade barrier. Retaliatory tariffs followed. Europe hit US goods like motorcycles and SUVs, while Japan and South Korea imposed their own duties. This tit-for-tat escalated into a global trade war, closing off key export markets for American automakers. The policy meant to help US companies at home is now hurting them abroad. Diplomatic tensions are rising, straining alliances and spilling into other areas of cooperation. For Hyundai, the trade war made the US market even riskier. Tariffs crippled its ability to import vehicles and parts affordably. The climate of uncertainty made long-term investment nearly impossible. Stable trade relationships that global manufacturing depends on are eroding. Hyundai's leadership was forced to rethink its entire North American strategy. The company faced mounting costs and unpredictable policy shifts. The global fallout is reshaping the industry's future. At the end of 2024, the US auto market was a model of diversity and competition. American, Japanese, and European brands all vied for consumer attention, driving innovation and keeping prices in check. Hyundai and Kia, arriving in the 1980s, had become the fifth largest automaker in the US, with over 10% market share. Their lineup, from the Elantra to the Palisade, offered value, technology, and reliability. This competition benefited consumers with better quality and affordable prices. Hyundai's Alabama and Kia's Georgia plants employed thousands, supporting tens of thousands more jobs in supplier networks. The system relied on global parts, but delivered American jobs and consumer choice. The American Auto Independence Act shattered this balance. The market's diversity and affordability are now under threat. The loss of brands like Hyundai marks a turning point for the industry. The effects of the American Auto Independence Act were immediate. By late 2025, new car prices had jumped 12%, with the average now over $54,000. Tariffs and supply chain upheaval drove up costs for automakers and consumers alike. Consumer choice shrank as foreign brands dropped unprofitable models. Entry-level cars, once dominated by Hyundai, Honda, and Toyota, became scarce, pricing out many buyers. Domestic automakers' market share surged, but at the cost of competition and affordability. The used car market exploded, with prices for late-model vehicles reaching record highs. A one-year-old Hyundai now sells for nearly its original price. The entire auto ecosystem is straining under the new rules. The market is less competitive, more expensive, and harder for everyday Americans to navigate. The landscape has changed, perhaps for good. For Hyundai, the new law was an existential threat. Their U.S. success relied on efficient global supply chains and competitive pricing. Even with a $2 billion Alabama plant, Hyundai's U.S.-built models only met about 55% local content, far short of the 75% required. Imported models like the Kona EV faced immediate 25% tariffs, destroying their price advantage. Hyundai's options were bleak: invest billions to overhaul supply chains, or pass costs to consumers. Relocating suppliers would take years and risked being upended by future policy changes. Absorbing tariffs would erase profits. Raising prices killed sales. After the act, sticker prices soared: $6,000 more for a Santa Fe, $12,000 more for an Ioniq 5 EV. Sales collapsed with a 45% year-over-year drop by Q3 2025. The business model that made Hyundai a U.S. success story was no longer viable. The company faced mounting losses and an uncertain future. The American market had become a liability. The writing was on the wall. In October 2025, Hyundai's CEO announced a phased withdrawal from the U.S. market. The company cited the American Auto Independence Act as creating an unpredictable, unsustainable environment. New vehicle shipments will end by late 2025. The Alabama plant closes in March 2026. Hyundai pledged to honor warranties and set up a trust for service and parts for the next decade. Nearly 800 dealerships face closure, with significant job losses. Hyundai's stock plunged 15% after the announcement. Some analysts called the move a necessary step to protect the company's global health. The U.S. market, once a growth engine, had become a drag on Hyundai's future. The cancelled Georgia EV plant stands as a symbol of the abandoned strategy. Hyundai's exit is a warning to other foreign automakers. The industry is watching and recalculating. Hyundai's exit is just the beginning. Communities like Montgomery, Alabama, face thousands of lost jobs as the plant closes. Supplier companies and nearly 800 dealerships, employing tens of thousands, are at risk. The loss will erode local economies and tax bases nationwide. Consumers face fewer choices and higher prices, especially for affordable vehicles. Other foreign automakers now face the same harsh reality: comply or consider leaving. The ripple effects could reshape American manufacturing for years to come. The American Auto Independence Act has fundamentally changed the U.S. auto industry. Domestic brands have gained ground, but at the cost of higher prices and less choice. Hyundai's exit is a stark example of the risks of sweeping protectionist policies. Tens of thousands of jobs and hundreds of businesses are lost, and consumers pay the price. The industry now faces a choice: double down on isolation, or reconsider and reopen to global competition. The long-term impact remains uncertain. In the quest for industrial independence, what price is America willing to pay?